Selling AMD today could be a huge mistake. In this video, I want to cover some key comments made by an AMD executive last week during a conference, along with insights from TSMC, gaming reviews, and the current state of AMD. AMD has earned the nickname Advanced Money Destroyer because if you bought it a year ago, your investment has been cut in half. It's down 50% since then. But let's be honest, AMD had no business trading near $200 a year ago. Back then, sentiment was high, and many expected it to become the next Nvidia. Now, at $100, despite a stronger business, some are calling it the next Intel, which I find hilarious. Looking at valuation metrics, its trailing PE is 100, which many consider expensive. But I'm not buying AMD for its past 12 months. I'm buying for the next 12 months and beyond. Its forward PE is 21.3, and for a company expected to grow rapidly, that's a reasonable price. Short-term, volatility is expected. It can go up or down. But long-term, if AMD executes correctly with its current product portfolio, $100 will look like a bargain in a few years. Before continuing, if you enjoy this type of content, hit all the buttons. It really helps. We're closing in on 32,000 subscribers, which is incredible. Now let's look at TSMC's numbers for February. Month-over-month revenue is down 11.3%, but year-over-year, it's up 43.1%. Unit growth is also strong, up 39.2% year-over-year. Back to AMD. The average analyst price target is about 50% higher than where it trades today. Key valuation metrics like PE, EV to sales, and EV to EBITDA are all below their 5-year median. Over the past few years, AMD's free cash flow has been inconsistent, nearly non-existent in 2019-2020. However, expectations for the coming years are strong. Free cash flow is projected to grow from $2.4 billion in 2024 to $6.7 billion in 2025, reaching $11.32 billion by 2027. Of course, these are analyst projections, and they can change. As I mentioned in my last video, AI and data center revenue are the main focus, but I also want to touch on gaming. Over the past 2 years, AMD has lost market share to NVIDIA in gaming. While this isn't their most critical segment, a billion-dollar swing in revenue still matters. In 2023, peak gaming revenue was around $1.6 to $1.7 billion. Today, it's down by $1 billion, with last quarter's gaming revenue at $563 million. If AMD can regain that lost revenue, it would be significant for a company that generated $7.65 billion last quarter. For comparison, NVIDIA generates nearly $40 billion in revenue, so a $1 billion increase doesn't impact them as much. But for AMD, it's a big deal. The embedded segment is another area to watch. At its 2023 peak, it generated $1.56 billion, but it's now down to $923 million. If this segment rebounds by even $500 million, it could meaningfully contribute to the overall business, especially since embedded products tend to have high margins. So I'll keep repeating it. AI and data centers are the primary focus, but AMD's other business segments will also drive revenue and EPS growth. Last week, AMD released the Radeon RX 9700 and 9700 XT. Reviews have been overwhelmingly positive, though concerns remain about retail availability and pricing. Demand is high, but supply is limited. Bad for consumers, but great for AMD, since the products are selling out. There was also an interesting shift in opinion from an unexpected source. A few months ago, I discussed how Tiny Corp, founded by George Holtz, had been critical of AMD, particularly its software development. Back in January, Holtz tweeted about whether AMD could invest in software, questioning why he should spend time developing on the MI300X. However, just recently, he posted that AMD had passed his cultural test and that he now believes they won't sabotage themselves with poor software. Holtz argued that CUDA isn't as much of a competitive moat as people think. It's just an early ecosystem. Tiny Corp has now developed a fully sovereign AMD stack, rewriting everything from hardware to PyTorch except for LLVM, and will soon port it to the MI300X. According to Holtz, NVIDIA's valuation at 16 times AMD's doesn't make sense, given that the hardware is similar, and AMD has even introduced double-precision tensor cores in RDNA 4. He believes market forces will eventually push NVIDIA to drop its artificial limitations. Holtz also made a bold move, revealing a screenshot showing he purchased $250,000 worth of AMD shares, betting on its long-term potential. While he acknowledges short-term volatility, he believes AMD is undervalued and that AI demand is just beginning. He even claimed the MI300X should outperform NVIDIA's H100 with strong software support. Of course, NVIDIA is already moving forward with the H200, GB200 Blackwell Ultra, and more, while AMD has its MI350, MI355, and MI400 lined up for release over the next few years. Additionally, Tiny Corp has been testing Intel GPUs alongside AMD's, even acquiring some of Intel's high-performance models. They're currently working on optimizing them, showing that Intel is also stepping up in the GPU space. Shifting to AMD's recent statements at the Morgan Stanley Global TMT Conference, Investor Relations lead Matt Ramsey and CFO Jean Hu highlighted key points. The MI350 is set for a mid-2025 launch, with the MI400 planned for 2026, aiming to compete with NVIDIA's Rubin. However, success will depend on execution, customer adoption, and integration with ZT Systems, which should significantly impact the MI400's competitiveness. On the server side, AMD's market share increased by 5 to 6% in 2024, driven by Turing platform adoption and total cost of ownership benefits. For those unfamiliar, TCO stands for total cost of ownership. On the client side, AMD has performed well, driven by strong growth in the Ryzen 9000 desktop and Ryzen AI 300 notebook portfolio. When AMD reports its next quarterly figures, the client and gaming segments will be grouped together under the same category, alongside data center and embedded. The embedded segment is showing signs of recovery, with strong design wins in 2024 totaling $14 billion, which bodes well for the long term. Gaming is also rebounding, supported by new GPU launches. However, for Q1, these sales will only reflect 1 month of the quarter. Regarding competition between AMD GPUs and ASICs, AMD's positioning aligns with NVIDIA's messaging. GPUs are flexible, programmable, and offer better long-term TCO than rigid ASICs, thanks to their adaptability to evolving AI models. On the ecosystem side, AMD highlighted the Rome software stack as a strategic advantage, supporting various frameworks and cloud providers. The acquisition of ZT Systems enhances their ability to design racks and clusters for large-scale AI deployments, allowing a focus on tailored system designs. Instead of treating MI300, MI350, and MI400 as isolated products, AMD is building a long-term roadmap with customers, similar to how NVIDIA does with CUDA. Looking ahead, AMD is positioned to grow with the market and possibly gain market share. This doesn't mean NVIDIA will struggle. NVIDIA currently holds about 90% of the market, so minor losses wouldn't be surprising. Selling AMD stock now at around $100 could be a major mistake. AMD has momentum across data centers, client computing, gaming, and embedded segments. Management has emphasized that their product portfolio is stronger than ever and will continue to improve over the next few quarters and years. Of course, if you don't want to hold it, that's your choice. Looking at the weekly chart, things don't look great. We're below the moving averages and the uptrend line. We'll have to see how this week plays out. The RSI is very low on the weekly, and pre-market we're at 98.4. On the daily chart, we were oversold last week. Now we'll see if we rebound around those levels. It's been quite volatile, moving up and down with a mix of green and red candles. For long-term investors, AMD at its current price and growth rate is very appealing. I'm a long-term investor myself, though I do take short-term positions occasionally. Even if AMD drops a bit below $100, I'm still adding to my position because I believe it has significant long-term potential. Don't make the mistake of selling just because your position is down in the short term. Red days and market corrections are when real opportunities arise. You might not see the gains now, but looking back, you'll realize it was a smart move to start building a position at this time. That's all for now. Like, subscribe, and share your thoughts in the comments. See you in the next one. Bye-bye.